Have you ever wondered about the twists and turns of our global economy? How did we transition from a system anchored in gold to one where governments wield the power to create money out of thin air? Join us on a journey through economic history, exploring the rise of Bitcoin amidst the tumultuous waves of financial evolution. In this video, we'll unravel the intricacies of the Great Reset and the rise of Bitcoin, shedding light on the forces shaping our financial future. From the departure from the gold standard to the emergence of central bank digital currencies, CBDCs, we'll navigate through the highs and lows of economic transformation. So, buckle up as we delve into the past, present, and future of our global financial landscape. Departure from the gold standard. Imagine a world where the value of money was tied to something tangible, gold. This was the essence of the gold standard, a system that provided a stable foundation for global economies for centuries. But as the 20th century dawned, major nations faced a critical decision: uphold the gold standard or embrace a new era of monetary flexibility. The choice to abandon the gold standard marked a seismic shift in the global economy, empowering governments to print money without the need for tangible assets to back its value. While this newfound monetary freedom promised greater flexibility, it also came with a cost, a departure from the discipline imposed by the gold standard. Governments now had the power to create currency ex nihilo, leading to unchecked proliferation and rampant inflation. The consequences were dire as the purchasing power of citizens eroded and global economies teetered on the brink of instability. Today, we grapple with the legacy of our departure from sound monetary principles, navigating a landscape fraught with economic uncertainty. Yet, amidst the chaos, Bitcoin emerges as a beacon of hope, a decentralized currency immune to the whims of central authorities. As we reflect on the departure from the gold standard, we're reminded of the importance of stability and soundness in our monetary systems. And in Bitcoin, we find a path forward, a return to principles of financial sovereignty and stability in an ever-changing world. Bitcoin, a beacon of financial sovereignty. In the aftermath of the 2008 financial crisis, a mysterious figure known as Satoshi Nakamoto unveiled a revolutionary concept: a digital currency free from the constraints of traditional monetary systems. Thus, Bitcoin was born, an embodiment of financial sovereignty and decentralization. Unlike fiat currencies, which are subject to the whims of governments and central banks, Bitcoin operates on a decentralized network, with no single entity holding sway over its fate. At its core, Bitcoin is more than just a digital currency. It's a testament to the power of individual autonomy and community-driven innovation. With a fixed supply of 21 million coins, Bitcoin stands in stark contrast to fiat currencies plagued by inflationary pressures. Its decentralized nature ensures that no central authority can manipulate its value or control its distribution. Through the process of mining, new bitcoins are created and transactions are verified, underscoring the self-sustaining nature of the Bitcoin network. Moreover, Bitcoin transcends geographical boundaries, offering individuals around the globe access to a secure and censorship-resistant form of wealth storage and transfer. Whether you're a dissident evading oppressive regimes or an investor seeking refuge from inflationary policies, Bitcoin offers a sanctuary in an uncertain world. As we navigate the complexities of the modern financial landscape, Bitcoin stands as a beacon of financial sovereignty, a testament to the enduring power of decentralization and innovation. Central bank digital currencies, CBDCs, versus Bitcoin. In the age of digitization, governments are racing to develop central bank digital currencies, CBDCs, as a means to modernize financial systems. But with this innovation comes a trade-off: greater efficiency at the expense of individual privacy and financial autonomy. Unlike CBDCs, Bitcoin offers a decentralized alternative that empowers users with unprecedented control over their wealth. While CBDCs promise efficiency and accessibility, they also pose significant challenges to individual privacy and financial autonomy. Unlike Bitcoin, where transactions are pseudonymous and resistant to censorship, CBDC transactions are subject to government oversight and surveillance. This raises concerns about the erosion of privacy rights and the potential for abuse of power by central authorities. Moreover, CBDCs rely on traditional banking intermediaries, perpetuating a system vulnerable to manipulation and exploitation. In contrast, Bitcoin operates on a peer-to-peer network, eliminating the need for intermediaries and fostering trustless transactions. This decentralized nature ensures that no single entity holds sway over its fate, fostering a community-driven ecosystem resistant to manipulation. As governments embrace CBDCs in pursuit of greater control, Bitcoin's value proposition only grows stronger. In the clash between centralized control and individual sovereignty, Bitcoin remains a beacon of financial freedom, a testament to the enduring power of decentralization, institutional adoption, and investment potential. But Bitcoin's journey doesn't end there. In recent years, institutional investors have flocked to Bitcoin, recognizing its potential as a hedge against inflation and a store of value. This influx of institutional capital has reshaped the cryptocurrency landscape, propelling Bitcoin into the mainstream spotlight. Hedge funds, asset managers, and corporations are allocating significant portions of their portfolios to Bitcoin, viewing it as a strategic hedge against currency devaluation and geopolitical instability. What's driving this institutional embrace of Bitcoin? One key factor is its limited supply. With only 21 million Bitcoins ever to be mined, Bitcoin offers a scarcity that appeals to investors seeking refuge from fiat currency inflation. Unlike traditional currencies subject to the whims of central banks, Bitcoin's fixed supply ensures protection against devaluation through excessive money printing. This scarcity premium has led many institutional investors to view Bitcoin not just as a speculative asset, but as a digital gold, an alternative store of value in times of economic uncertainty. Moreover, the maturation of Bitcoin's infrastructure has bolstered institutional confidence in the cryptocurrency market. Regulated investment vehicles, such as Bitcoin futures and exchange-traded funds, ETFs, provide institutional investors with avenues for exposure to Bitcoin while complying with regulatory standards. These financial instruments offer liquidity, transparency, and security, essential qualities for institutional participation in any asset class. The growing acceptance of Bitcoin by institutional players also reflects a broader shift in investor sentiment towards cryptocurrencies. As traditional markets grapple with volatility and uncertainty, Bitcoin emerges as a beacon of stability and potential growth. Its decentralized nature and global accessibility make it an attractive addition to diversified investment portfolios, offering diversification benefits beyond traditional asset classes. As Bitcoin's market capitalization surpasses trillion-dollar milestones, its ascent shows no signs of slowing down. Institutional adoption is not just a vote of confidence in Bitcoin's value proposition, but also a catalyst for broader acceptance and integration into the global financial system. The Great Reset and the rise of Bitcoin mark a pivotal moment in economic history. From the departure from the gold standard to the emergence of decentralized currencies, our financial landscape is undergoing a seismic shift. As we stand on the precipice of change, the choices we make today will reverberate for generations to come. Whether you're a seasoned investor or a curious bystander, the future of finance holds boundless opportunities and challenges. If you found this video informative, then don't forget to hit that like button and subscribe to our channel for more amazing content. Thanks for watching, and we will see you in our next video.